That's the trick for you to bring on batteries from home.
Okay, so this is the P4. So we doing the periodic inventory system, the merchandising income statement. So of course, we start with our heading, which is our company name, the name of the statement, and the date. And so then you go with the regular income statement. Well, not the regular income statement. This is going to be the multi-step income statement. So that's when we start with one section is revenue. Well, we have to get the revenue amount. Then we have to get the cost of goods sold amount, subtract that, then expenses, then other income expenses, then net income. So that's what this is. So we start off with revenue. We have to get, well, revenue or sales. We have to get net sales. So net sales is going to be sales less sales returns and allowances. So that means my sales number is going to be this 4,433,912. And I have to subtract this 11250 to get me my net sales. So either you'll be provided with net sales or you have to figure out how to calculate it. And that would be how it's normally calculated. And that's how it's normally calculated. So 433 minus 11 gives me 422,662, which is my net sales figure. So I calculate my net sales, then I go to the cost of goods sold. Which is the long part, really.
So it has to have all those columns.
If it makes it easier when you adding and subtracting whatever you need to add and subtract, when you have the columns. Like right now, that column don't look like it make it necessary. When you get to a cost of goods sold section, you would have three different things. It's easy to mix it up and end up adding the wrong thing or subtracting the wrong thing.
Okay.
So it makes it easier to follow when you have the columns. So that'll give you a net sales.
Okay.
Then that's where you get the cost of goods sold amount, which includes a number of different things. So it starts off with opening inventory. Then we have purchases. Then we have less purchases, returns, and allowances. We get net purchases. So all of this is stuff I memorize. Plus freight in. Net cost of purchases.
So everyone will always, every income statement will always have these kinds in it. So
Every periodic inventory merchandising income statement, that's periodic.
okay,
Yes.
I mean, like, okay, if I go and I memorize these, like, would it be whereas on the test, so I'd have to like check and make sure they have been all of these, or they automatically?
It's always gonna be that you have to check and see, but that's why it's important to know what all belongs there. So if they give it to you, you know where to find it. Like right now, I'm writing this out in my head, but that
That don't necessarily mean.
that don't mean it here.
All of that.
Right.
Okay.
So I know that this is what it takes to get my cost of goods sold.
Okay.
Yeah. So once I get that, then I take out my ending inventory and then I get my cost of goods sold. So all of this goes into finding out my cost of goods sold. I need my opening inventory. I need my purchases. I need my purchase returns and allowance. There's a calculation, so I don't need to have that. I need my freight in. This is another calculation, so I need to have that.
Anything with net in front of it.
The two things that I've net, yes. Cost of goods available, sale is also a calculation, and then cost of goods sold is calculation. So everything italicized is a calculation.
Okay.
Yeah. So to do that, therefore, my cost of goods sold, I'm starting with my opening inventory. They tell us merchandise inventory at the beginning of the year was 81,222. So to make that simple, you could put that in your second column, 81,222. And then everything from this point here goes in this column here.
Okay.
To help with the lining up. So purchases, they give us is 221,185. So 221,185. Then we have purchases, returns, and allowances, which is 30,238. So we put that in as 30,238, subtracting it. And when we add the two, or you say 221 minus the 30, you're going to get 190,947. That's my net purchases. Then I need to get my freight in, which is the 10,078. 10,078, I'm adding that in until when I add those two numbers by my calculator, add those two, I get 201,025. And I could put it, I'll move this line, sorry. I'll put it here like that because I know that the next calculation, cost of goods sold, is this plus this. So I've seen people put it over here and then they forget to add it and then they say that's right. So that's what the importance of lining it up helps you to make sure you adding everything up properly. So this now line telling me that these two are going to be added to give me my cost of goods available for sale. So my cost of goods available for sale is actually 282. Then I need to subtract my ending inventory to get my cost of goods sold. Ending inventory is 76,664. So minus 76,664 means that my cost of goods sold is going to be the sum of, is going to be this cost of goods available for sale minus my ending inventory. That's my cost of goods sold. So this is the cost of goods sold amount 205,583.
Okay.
And if you want to, you could just put it as a negative number. Positive or negative number is fine. Once you know, you're supposed to take net sales minus this to get your gross margin, which is not the calculation again. So I can give a space, gross margin, and gross margin is going to be equal to this minus that, which is 270. And that's just one piece. So this ain't even the rest. And so let's say the line help you to see what you add and subtract or where you got a calculation. That's my gross margin. From my gross margin, I want to look for my expenses and put my selling and my administrative expenses. Then I want to do others, if there are any other. Because again, every company don't have all the same things. So sometimes you see other. If you see interest something, it's definitely a other. Sure.
Sorry. I come back, I will take that out and bring it up. Filing thing, this the wrong one that came in.
Okay.
I could do it now, or you, I
Yeah.
could give you a couple without.
Okay, you can make a couple minutes, yeah. Okay. All right, so yeah, so that's your gross margin. From there, you look for your operating expenses are next. So you put it there, operating expenses, and that's where you have it grouped by selling or admin. And they think in this particular question, they tell us that, what they tell us? They tell us what are our selling expenses, and then they say the other ones are general and administrative. So you should have groupings for your expenses that are listing. listed, sorry. So your, I guess we could start with our selling expenses. That's where this freight, oh, they don't have freight out here, but that's where freight out would go. I mean, selling expenses if it was there. And so they say,
Would we always sell it, or is there selling expenses from?
I think they try to. I think they try to do it for y'all because y'all are new. But I would say, so they say the selling expenses are store supplies. Why does they know? Store salaries expense. We have advertising expense. We have store supplies expense, so you list them out. We have depreciation expense, store equipment. And so I should have a total for each of these. So my store salaries expense is 107,550. My advertising expense is 18,200.
They would
My store supplies 464.
They're gonna take pity on us and put some lines in the music.
Yeah, so it's good to have a rule. I mean, they probably can, probably can. Kids have a ruler.
It's in the last text, my jacket jar balance, swing balance.
Because,
I put the wrong figure.
I'd say bring a ruler to the test. Use a ruler. That should help. Yeah, so that is now my. Okay, so that's my selling expense total here in this column. And then I can do general administration, which is everything else. So store salaries is there, so office salaries. And I would say here, if you could tick off as you go, then that makes it, that makes it a little easier to make sure you don't forget anything. So I have this. Advertising, I have that. Rent and insurance, I don't have that. Rent expense, insurance expense, utilities expense. Expense.
And then depreciation expense office equipment.
And then office supplies expense too. All right. So rent is 14400, insurance is 2800, utilities 18760. Office supplies is 814, and then this last one's 185. Then when you add it up, you get a total. There, that's my total in both categories, but I should also have a total operating expenses. So again, that's why I have it separated, because then the sum of these two gives me my total operating expenses, 193. And like I said, I'm gonna put it as a negative, just so you know, it takes away from this.
Okay.
To give me my operating income. So that's equal to this minus this gives me, no. Okay, that minus that gives me an operating income of 23,941. There.
You're not done?
No, we're not done.
Oh, okay.
All income statements end with net income. Well, actually, we are done. We wouldn't have been done if there was anything else left to do. So because there's nothing else left, like your other, like I said, things like interest, expense, interest, income, they're your other. But they don't have any, so we can just call this net income and then we're done. And of course, if once we're done, that means you have to put the double underline for.
Okay,
Mhm.
so. On the test,
Mhm.
do you have any other?
I don't remember. But if it's something that's other, then you just would put on any operating expenses. other expenses, and then just how you, like how you list it up here, you would list it below as well.
Oh, I think for the homework, it was like, I think we had other,
But the homework question came from here? No, it didn't come from
I
here.
think the section of the. Something.
Other expenses / revenue.
Yeah, okay. And so you just put like. So like whatever else we didn't already go when you put there,
Right, because you're not gonna put anything here twice.
okay,
Everything is only gonna be one time. So an example of other, see if they give one somewhere else. Like this interest expense is other.
Mm.
Interest income, that's other. You would just add the income in as a positive number. And if you have an expense, you would add it as a negative number.
okay,
So that when you add them together, because you can't add an income and expense again and the number become bigger. So they have to subtract from each other.
okay, so subtract the expense from the income,
Right.
and then what would I do? The figure
And then you
added?
would just, take it from, this would have been stayed as operating income. So let me redo it. What I do? Anyway, so it would have been operating income. And then what you would have done, this wouldn't have been no double underline because it's not finished. Oh, geez. Sorry. Then I would have said other income / expenses. And then I would have listed like anyone first in that interest income, interest expense. The income would have been, like I say, a positive number. So if I take this first one, 800, and then expense being 3,600, 3,600. And then when I add the two, I would have had like a further subtraction of 2,800 because my expense was more. I did it small. And when I did, then I took that now. So I would take that from this balance here. And then I would have, then I would have my net income.
So if your revenue was more. Then if you would have added to it. the
Yeah.
net income.
Mhm. So now this would be my net income. So like you say, if my revenue was more, that's why I say if you put in the revenue or the income as a positive number and you put the thing on as a negative number and you add in your calculator, it can do it for you. If it come out as a negative, you put it as a negative and you know it's gonna subtract it.
Okay.
So let's say this was $8,000 on a zero, then it would have been a positive number when you did this, and you would have added it to what is above.
Oh, okay.
Yeah. So, but yeah. And so, of course, the net income spot is the only place where you should have the double underline. Everywhere else has only one line.
I understand now.